Welcome into Mindset. I am Brad Barrett. Today we're going to be talking about SpaceX. Just this week alone, I have received no less than probably 5 inquiries from clients about, hey, the SpaceX IPO. So we're going to talk about what an IPO is, what SpaceX is this hype, or is this actual reality and potentially a good investment? We're going to go through all that today on Mindset.
So should I put all my chips in, Brad?
You should not.
Okay.
By the way, I've said this before on our show, you should not put all your chips into really anything. That's my typical advice across the board. Kira and I were actually talking about this pre-show. It's like a difference between concentration and diversification. I'm not nitpicking on different investments here. We're going to go through this because this idea, the engineering and the technology that's out there, I got to be first to say it is unreal. So cool.
All right, so back up. For the people that maybe not know what all this is all about, SpaceX, what is it?
Okay.
Like,
so
they have a lot of stuff that I don't know. I mean, I know in general.
That's actually why I want to talk about it, because what's unique about SpaceX is, unlike Elon, so Elon Musk owns Tesla, owns SpaceX. We're going to talk about a couple of those things. But the difference between like a Tesla, for example, and SpaceX, you're getting more than just rockets with SpaceX. You're getting Starlink, which is a satellite telecommunications, essentially.
Huge. That's
okay?
massive, yeah.
You're getting reusable rockets, which we're going to go into that one, but just rockets in general. By the way, it's one of the first private industries that's taken on a government entity in terms of NASA for space exploration. You're kind of like, well, why? There's a ton of technology and a ton of reasons why this might be unique. Transportation, satellite advancement, you name it, okay? Energy consumption, a whole host of things, right? You're also getting AI. You're getting XAI in this whole thing as well. So this is all under the SpaceX umbrella. Okay, so that's why I think it's unique in the sense it's not just like a car company or something like that, right? This is kind of a multi-use thing. So it's unique. It was founded in 2002. We pulled out some data by Elon Musk, ultimately to reduce space transportation costs and enable the colonization of Mars. Now, I think if you read that, you're kind of like, who cares?
Wait, that's why they started?
Yeah.
To colonize Mars?
Well, that's what they said.
Oh.
That's his whole
like
goal. I mean, this guy's
founding goal.
He's eccentric, let's be fair, right? So he's obviously got these things out there. But since then, it's also morphed into some crazy technology of relanding.
Because they're the ones putting all the satellites up now.
Yeah.
They're basically running.
Starlink is launching every other day.
Game.
Right out here in Southern California, we hear the booms every other day.
They're really cool to watch.
They are cool.
Yeah.
My son and I are always out on the porch like once a week. We're like, oh, look. Like, it's rad in a way, right? Like, to me, I think that the Starlink alone is going to disrupt the telecommunications industry. Think about it. Why would I want to go and pay for a telecommunications or fiber optic network when I can get satellite anywhere? Like when my son and I go dirt bike riding out in Mojave, I get very little service. If I have Starlink somehow,
just follows you everywhere
right?
you go.
So like, there's a ton of applications to this. Okay, so that's SpaceX.
Right.
Okay. Then you got this IPO. So I want to talk about let's go into the investment world. So now we got a company who's private. All that means is there's not a public offering, right? It's a privately owned company by an individual, this guy, Elon Musk, okay? An IPO is basically when it's the process, okay, of when a private company chooses to go public. And what does that mean? That means they want to go public largely to raise more money to continue the endeavor of whatever the company is, right? They're going to use shareholder value and public money, right, as investors to fund the endeavor of the company.
If I want to get in on this, what's the deal here?
So when you have a private company, the reason why it's got the big hubbub here was because they basically privately said, we're looking to go public, right?
Yeah.
So now all of a sudden people are like, oh, we can invest in this really, really cool thing.
I can buy into this now.
Bingo. So when it goes public, it's now trading on the stock market. It will issue shares. We're going to talk about that kind of stuff. And now you can publicly invest in it as an investor. And this is what we're going to talk. This is the meat of the show today here, okay? The first thing I want to bring up is what SpaceX was. The second thing here was what an IPO is, okay? It's initial public offering. That's a private company going public, okay? Before I get into like, is it hyper reality or the metrics and the merit of this stuff, the valuation of a company is what needs to be discussed here. Now, I won't go into the whole metrics here, but this is how big banks like JP Morgan, Goldman Sachs, they're the underwriters. They're the ones that will take a private company, do the underwriting to figure out the value of this company, and that's how you get the price of what they're going to go on the public market for.
That's the initial price of that
Bingo.
stock in that IPO.
And if I'm being completely candid with you, there's a huge gray area in how you value a company like this. The initial valuation, the projected, is somewhere between $1.5 to $1.75 trillion.
Jeez.
Okay.
That has to be one of the highest.
It is. It's the highest ever. Now, my problem with that as a fundamental investor and managing the billions that we manage for our clients is how do you derive whether or not that's accurate or not. And here's the answer. You will never know. The old saying, my grandfather always said this, something's only worth what another man will pay for it.
Yeah.
So if they said that out there and you want to invest in it, that's the agreed upon price. It is what it is. But they are taking fundamentals in it. But like there's not a ton of revenue coming in this place. Starlink has some revenue, things like that, but it's hugely capital intensive, which means it's thin margins, right? When you have a very high operating expenditure in a company, any disruption in fuel prices, for example, operational prices for all the equipment it takes to run it, let alone the personnel, the insurance, good Lord, right? These all eat into a margin or whether or not you're making money on it. So I'm bringing this up simply to say, I had a couple of conversations recently with some clients who've asked about this. And I was managing assets for clients when Facebook came out. To me, this is very eerily similar to Facebook going public, in my opinion.
Closer to Facebook or closer to Tesla?
Closer to Facebook.
And Tesla's a different...
It's a different animal. Same kind of thing. So I guess that'd be more because it's an Elon thing. But to me, the frenzy on this is very akin to what I saw when Facebook came out. 2011, I think it was.
Yeah, the hype.
I can't remember. But the hype of it was insane. Was it 2011, 2014?
I'm gonna look it up
But
right now.
whenever that was going on, I remember having this conversation, and we did our own internal value of the company, right? And we priced it somewhere between $20 and $23. The initial public offering of the price was $38. I was actually getting some heat from clients. What year was it?
2012.
2012. Sorry, I was in between. 2012. We were getting heat from clients. I want to invest in it. And I'm saying, look, you absolutely can, but we just feel like it's overpriced. We ended up being right. If you looked at the stock price, the frenzy of it all, everyone was investing in this $38 public offer price for this company that everyone wanted, Facebook, right? And it went down. I think it got to as low as $19. And it took a whole year for it to get back up to the $38 price.
Do you remember what the total valuation was?
It was like 200, 300 billion.
Okay.
So we're talking 5 times less than the valuation here. Think about that.
No, it'd have to be way less.
200, 300 billion was the value there.
Oh,
roughly.
100. Okay.
100,
gotcha,
yeah.
Gotcha.
I mean, it was insanely less, right?
Yeah.
So that's why I'm bringing this up as a valuation before I get into the metrics here of the hyper reality and what to look at here. The valuation to me alone is problematic from an investor's perspective.
Well, from my perspective, the kind of newbie layman, and I know if you're that far up, like it's your market cap or whatever.
Yeah. Ooh.
If you're 1.6 trillion, like
is there a ceiling?
The odds of you doubling into like a $3 trillion company is pretty low.
Well, the counterbalance to that is this is in a space where there is no cap. This is new exploratory stuff. The AI alone, the fact that he's basically going to take on a telecommunications with satellites now. I mean, there's a ton of things in here that I could give it some serious merit that you can make a case that if their valuation is starting at 1.5, 1.7, let's say that's what it comes out at, right? You know, who's to say it's not a $3 trillion company? You know what I mean? I don't know. That's my point about the valuation is it's kind of sus.
Yeah.
It's kind of like, and I just want everyone to know that. That's my first point here. I just want everyone to know you got to just go into this eyes wide open here in terms of what you're being valued at.
Okay, I guess how do I say this? I didn't realize that like NVIDIA right now, they're saying is 4.5 trillion. So if you're coming out of 1.5, 1.6, there is still room
There's
to double or triple.
But the thing about NVIDIA is that's an established company.
Right.
We're talking about an initial public offering of, a quarter of that, which is the stats on this is the most this is the highest valued company ever to come out public.
Yeah.
It would be if it does, as far as we can see, right? Not that I'm saying it's a problem. To your point, there is room. There could be room. I'm not saying that. I'm just saying if you look at things like the Facebook kind of thing, I'm not saying it's going to happen this way by any means. But I'm just saying like that's where I'm going to get into my points. A lot of this is some hype, and I want everyone to just be cautious.
So tip one, be cautious.
Tip one, be cautious.
Especially when
on the valuation alone.
Especially when your CEO is somebody that can, with a tweet, can tank his own stock.
Yeah, pretty much.
Any thoughts, Kira?
Pretty much.
No, I just had written down in my notes that the more hyped an IPO is, the more likely that the expectations are already priced into that.
That's why I'm bringing it up. Because when it comes to investments, expectations or what the economists call it is consumer sentiment. There's a sentiment that there's a fondness, a love for this company, regardless of its actual fundamentals. This is my point about the good company
right.
that we wear, but maybe not the best investment.
Because also isn't the point of an IPO, not the point, but the benefit, you want to get into an IPO when nobody knows about the IPO to get that low price.
So that's the other thing I want to talk about. That's a good point. The first thing I want to say is you hear me, if those of you who watch our show often, you hear me say, the more you can remove emotions from investing, the better investor you will be. Let's just, okay?
Logic.
It's a little
Logic.
hard.
Now,
It's a little
I have to
hard.
say this because I do feel like there is a lot of emotion going into this. Either it's a fondness or a love, or they are wrapped up in the technology, all factual. I'm not going to deny that. I'm just saying that doesn't mean it's going to be a good, public company. It doesn't mean it's going to make money. It doesn't mean it's not going to take on debt or create shareholder value. These things don't translate that way.
Well, logically,
It can.
Logically speaking, based on our show the other day about good companies or good investments,
Yeah.
I see massive overhead costs, not like a lot of direct cash flow, at least to this point with their products,
Yeah.
and a CEO that's a bit temperamental. Like this to me seems like a bad,
I don't want to call it bad. I actually think
maybe not bad, but
yeah, I know what you're saying. I'm not saying it's good or bad. What I'm saying is I just want you to be, our job here is to give you the details as far as we can see it from a purely objective standpoint, and just go into anything you're gonna do eyes wide open. That's all I'm saying, right? There is hype here, right? Everyone thinks, oh, it's the next $1 trillion company, or
fact.
it's backed by Elon, so it must succeed. Okay.
Honestly, not that I would invest in this, but I understand the Elon one. Like, just like he has like a track record of being successful. So you're like,
100%.
if he did it once, so you can probably do it again,
Sure, he's a pretty, whatever you feel about him, he's got a good track record of
Well, he's
He
definitely
really
eccentric
does.
enough to figure it out,
Yeah.
right? So here's the reality as I see it. So that's the hype, right? I think everyone can agree with that. Did I miss something on the hype?
No, I think
that's-
you're good. I think the only other thing is that I think space is always kind of seen as like the next frontier. So I think
Yeah.
that's why people are like, oh, if I get in on this now, this is like it's not unexplored, but
Sort of.
a
Kind
new
of is.
frontier kind of idea.
New frontier. So I get that. Okay, fine. And that's the hype side of it. But let's come back down to earth, pun intended.
Oh,
Right? You like that? And let's talk about,
That was nicely placed.
you like
Yeah,
that?
well done.
The reality here.
the reality.
I already said this, but I'm going to reiterate this point. You're not early. So I think people think, oh, I'm gonna, it's like I've had a couple of conversations with clients, and they're great people, and I totally get where they're coming from. But I'm like, I had to stress with them, like, you're not early. Like when this goes public, it's public. I can buy it, you can buy it. Every Tom, Dick, and Harry can buy it. Like it doesn't matter. It's just a private company going public. You buy it on the open exchange. That's that, right? Yeah, and I think there are private investors, underwriting banks that will have gotten in at much lower valuations, which is all legal based on the contracts of a public offering. There's also restraints on those things. They have certain hold periods they have to do. There's requirements. It's not like this isn't a pump and dump scheme kind of thing. This is companies go public all the time. Okay,
And
this
they're-
one's just notable.
They are pretty
Right.
established and successful
Correct.
already. So
Correct. The other thing on reality is, historically speaking, I know I made the reference point to like Facebook as an example, hypothetical, right?
Mhm.
But IPO prices in general, historically, are often inflated. Like if you look at historical periods, they're usually inflated, right? Largely due to demand, right? Because there's a reason why a private company would be going public. There's probably a good service or a good product or something, and there's a demand for it. So they tend to be a little inflated, just something to consider. Okay. I mentioned volatility, but that's a huge thing with IPOs as well.
Yeah.
You're just going to see swings. It's just, you need to know that. Whether you invest in it or not, you just need to know you're probably going to, historically speaking, most likely you're going to see some significant swings. And I think it's important to understand, to that point, it can take years for the stock price to actually, or for the stock itself, to justify its price. I actually think long term, I think if he does it right and these things come to fruition, especially Starlink and the XAI, I think it's a huge market. There's no doubt. And the guy's brilliant. He can do it. Remember, public companies have a lot to do with their boards, their CEOs, how good their CFOs are, what their COOs, the operating officers, right? Like
more than just Elon over
it's
there.
more than that's a
Yeah.
good point. It's more than just Elon. Okay, they're probably going to have a CEO. They're probably going to have a board. It matters how they're running it. It does matter. Okay.
Yahoo Finance is warning that high-profile IPOs often deliver sizzling opening day drops, which leaves investors to confront harsh realities afterwards. So kind of, back to the point that you're saying that, the initial offering already has that expectation valued in, and it's not always gonna.
Yeah. I have a feeling the trading on this is going to be insane.
Yeah.
Right?
I think a lot of people
So-
really believe that if they buy or invest in the IPO, then they're going to really get in early and
I
hit it
really
big.
do feel that. Yes.
Like that's kind of the narrative online is that everyone's believing that.
And what's crazy, what I'm trying to say, it's almost like they're blind to it. That's my point here. It's exactly good. I can't stress this enough. An IPO, which is a public offering, and you're agreeing to the valuation of whatever it is, okay? You're not getting in on something that's like that someone else is. It's a public offering. And it's weird with IPOs, not just SpaceX, but just general IPOs. People have this notion like there's some magic sauce to it. I'm like, once it went public, it's public.
No, this is completely myth
You know?
busted for me.
Yeah.
I'll admit, I full on, when I hear IPO, I'm like, ooh,
Yeah.
I got to get on that
Right. But like
before it blows up, you know?
when you break down the acronym of IPO, it's an initial public offering. Everyone just skips over. It's public.
Public.
You can buy it. I can buy it. You can buy it. Anyone can buy it. There's no magic sauce here. Okay. Once it goes to the open market, it's open market. And I agree with you. Yeah. I think that people need to hear this. It's like, there's going to be volatility. This is not just SpaceX. Every IPO has basically kind of shown that. You know what I mean? And some are, when the underwriting banks get the value right, you'll see that it's very appropriate in terms of like, there'll be less trading volatility and it's more accurately priced. It's hard to do that. I'm not blaming the banks. It's hard to do that. It is hard. That's why it's led with this whole thing of like the valuation is the first thing I'm like, you need to be aware of. Okay. You're agreeing to this valuation that these banks have derived that we don't know until it hits the open market. We don't know what the supply and demand is actually going to say it's valued at.
Yeah. What's like a time period that you feel like once it hits the market is like an appropriate time to actually value that?
I mean,
like years, months?
I don't know. I don't know that I have a good answer for that. I would just go on. I would say somewhere between 6 and 12 months. Because if you look at the Facebook, for example, it took almost a year. I'm going to keep using that as an example. It is just an example. But it took about a year to get back to its initial $38 price.
Right.
But it went all the way down to like 19.
And companies might not ever get back to that price, right?
Maybe not, no. Yeah.
Okay.
That's the open market supply and demand. It's how well the functioning is, what the revenue is. Remember, as soon as you go public, now you're doing quarterly, stockholder calls. You have a reporting requirement. It's different than a private company. So yeah, you're subject to the court of public opinion, as they say.
And this one will certainly be right in the spotlight
Big time.
for a long time.
I think for us, I know we will end up looking at it if it becomes public. Until then, we have no data on it.
Right.
But when we do, we'll start looking at it. We did that with Facebook, and I remember us pricing it more in the low 20s, and we were pretty right.
Yeah.
So I think a good investment manager can also help you with this to look at it from a fundamental perspective and try to derive actual value out of it, not the inflated underwriting bank value per se.
Right. Also, I don't think we mentioned this, but it's looking to go public in June. I
Yeah,
don't
that
think
was
we
the
really
initial.
gave a
Sorry,
date.
yeah. We're sitting here in April. You're probably watching this here April, May. This idea is in June. Whether or not that happens, we'll see. So that's why I want to do this show, because I think it's been talked about a lot, and I want to make sure I have no details on numbers other than what I've shared with you. I just want to bring you through the idea of this hype versus reality concept and make sure that, as cool as this might be, still going back to, if you remove emotions from investing, you will be a better investor. That's just flat out. But SpaceX is different. Let's be fair. All right, let's just land this plane this way, land this spacecraft, as they say, right? It's not just one business. It's a couple. I dig that. I'm big on that one. I like that one.
Yep.
It's infrastructure, not just a company. The vision of this whole Mars colonization thing, the global connectivity through Starlink. I think that's awesome, and I think there's this pent up demand, if you will, for a private company like this, that there's something to be said about that.
Right.
Yeah.
Right. So I got to give it that. Supply and demand still dictate the price of market. So if you have pent up demand, it's there.
Yeah.
That's the thing. Back to my grandfather's statement, right? It's only worth what another man will pay for it. If people are willing to pay that price, guess what? Whether you like it or not, that's the price.
Yeah.
Yeah, I think I was a little more excited before we talked.
Oh.
Now I'm a little less.
Why?
Because I thought let me get in on the ground floor. Let me get in quick.
The ground floor.
Now I'm not. So,
Well, that's why I wanted to do this, because I feel like I don't want to burst bubbles here, but I'm like,
bummer, man.
well, the initial public offering is exactly that. It's public. There's not like some, and I think for most people, if you don't hear this and don't adhere to that, you would get into a little blindly thinking you're going to be for a roller coaster. You're in for a roller coaster ride, man.
No, hey, I
don't
need a rude awakening with my portfolio.
I mean, like I said, I think it's super cool. Very rarely you're going to see me do IPO shows on this and talk about it. This one's obviously a pretty notable one.
It's a great excuse to talk about IPOs.
Yeah, it is. It was a good excuse to mention what an IPO is and how it operates. I know I didn't go in depth on it, but it's pretty simple. It's a private company going public. And I think it's important to remember when it goes public, it's public.
Yeah.
Everyone can access it. There's no like
right there in that little P there.
Right there in the P. Initial public offering.
Very good.
This one is really cool. Personally, I think it's awesome. You know, from a good company and an interesting company. That's all.
Exciting.
All right. I enjoyed that one today. Hope you guys did too. Thank you all for our subscribers who watch every week. We got some really great episodes coming up. We also have some fun interviews coming up. We're going to take a whole new endeavor here on the interview styles and things.
Exciting.
Yeah, talking with how money plays into all of our everyday lives, whether you're a business owner, an employee, whether you're a mom, a dad, a husband, a father. We're going to talk about all of it. We're really excited about that. So stay tuned for that. And if you're not a subscriber currently, please do so. You're going to love it. You're going to see some really good content here from the Mindset team. And as always, until next week, to lead with love, it's going to be all right. See you guys.